Two stocks under $10 that could beat Google. Yeah, you heard that right. Sounds insane, right? Google is worth nearly $2 trillion, dominates search, owns YouTube, and is leading in AI. But history shows giants do fall. Yahoo once ruled search, Nokia once ruled mobile phones, Blockbuster once laughed at Netflix. And in today's video, I'm going to show you two tiny stocks under $10 that could one day challenge parts of Google's empire. And listen, you'll want to stick with me all the way through, because stock number 2 might shock you even more than the first. Now, let's set the stage. Google is a monster in 3 markets: search and advertising, cloud computing, and artificial intelligence. But disruption always comes from the edges, small companies with sharp focus and unique technology. While Google spends billions spreading itself across everything, these under $10 players are laser-focused on niches where Google is vulnerable. The crazy part? Both stocks are priced so low right now that a small bet could mean a massive payoff if they actually carve out market share. And I'm not throwing random penny stocks at you. We're talking about companies with real customers, real tech, and real traction. Before we jump in, quick favor. My goal today is simple. If this video helps you discover even one new idea, hit that like button. Let's aim for 500 likes on this one, because that tells me to keep hunting down more hidden gems for you. And of course, if you're new here, consider subscribing so you don't miss future deep dives. Let's kick things off with our first stock. The company is BigBear.ai, ticker symbol BBAI, trading around $6 to $7. This isn't your average AI startup. Big Bear is carving out a moat in government and defense, industries where Google simply can't play. Why? Because of strict security clearances, classified projects, and national defense rules. That gives Big Bear an opening in predictive analytics, battlefield decision support, and large-scale intelligence systems. Their AI doesn't just crunch numbers, it models outcomes, helps commanders predict future scenarios, and processes massive streams of real-time data. That's a very different world than Google Ads or YouTube, but it's a world where AI could be even more valuable. Financially, Big Bear is small but scrappy. In recent quarters, they've landed multi-million-dollar defense contracts, and their backlog keeps growing. Yes, earnings have been choppy, and Wall Street has punished them for weak guidance, but that volatility is exactly why the stock is still under $10. When contracts hit, this stock pops. When guidance softens, it sinks. For investors, that means risk, but also big potential upside. If Big Bear scales its government contracts, it could become the go-to AI partner for defense, an area Google will never dominate. On top of that, Big Bear has been actively positioning itself in the broader commercial market, aiming to bring its defense-grade AI solutions into industries like logistics, healthcare, and manufacturing. This expansion matters because once a company proves its technology in the toughest environments, like national defense, adapting it for private sector clients becomes much easier. If Big Bear can successfully transition some of its government-owned products into mainstream enterprise use, it could multiply its addressable market and give investors even more reasons to take it seriously. Of course, it's not all upside. Big Bear has faced challenges with debt and cash burn, which raises concerns about future dilution if the company needs to raise more capital. Earnings reports have shown inconsistency, and management has occasionally struggled to meet its own projections, something that makes Wall Street skeptical. On top of that, competition from larger AI contractors and cloud giants means Big Bear will have to fight hard to maintain its niche. For investors, that makes this a classic high-risk, high-reward play. Now, before I reveal stock number 2, let's take a step back. Google's dominance comes from 3 pillars: search and advertising, cloud services, and artificial intelligence. But one area where Google still struggles is searching and monetizing non-text content. Think audio, podcasts, radio, sports broadcasts, and streaming video. And that's exactly where our second stock is positioning itself. This company has built what it calls an AI operating system for media and advertising. Instead of crawling web pages, its platform can transcribe, analyze, and tag video and audio in real time. That means a radio station, a TV network, or a podcast platform can suddenly turn hours of unstructured media into searchable, monetizable data. It's a problem Google has never fully solved, because its focus has always been web and now generative text. Financially, this company is still small, but it actually has recurring revenue from customers in media, law enforcement, and enterprise. In its most recent reports, the company showed steady growth in its aiWare platform, even while still running at a loss. That's normal for an early-stage disruptor. The real story is focus. While Google pours billions into self-driving cars, quantum labs, and every AI experiment under the sun, this under $10 stock is locked in on one mission: owning AI for audio and video. So what's the name? Veritone, ticker symbol VERY, trading around $5. It may not replace Google search, but if it becomes the default engine for indexing and monetizing video and audio, it could quietly eat into the ad dollars that fuel Google's empire.